Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about 361 Degrees International Limited Annual Report. 361 Degrees International Limited offers a diverse range of businesses and services through its two main segments, adults and kids. The company manufactures and trades in sporting goods, including adult and children footwear, apparel, and accessories for sports and life under its 361 Core and 361 Kids brands. In addition to its core business, the company also engages in various other activities such as manufacturing and trading shoes soles, trading in children's sporting goods, and operating a gas station. Furthermore, it provides science and technology promotion and application services, conducts research and development of sporting goods, and organizes sports competitions. The company has an extensive distribution network, with its products available through its own website, 361sport.com, as well as other e-commerce platforms such as Tmall, Taobao, VIP.com, and JD.com. Its products are also sold through authorized retailers and distributors. With a presence in the People's Republic of China since 2003, 361 Degrees International Limited has established itself as a prominent player in the sporting goods industry. 361 Degrees International Limited market capitalization of $14 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that 361 Degrees International Limited holds a significant advantage in their industry. 361 Degrees International Limited trades at a higher price-to-earnings ratio of 9 times and a higher price-to-book ratio of 1.21 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 27% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.77%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth and decline can be identified through a review of key performance indicators. On the growth side, e-commerce business has been a significant contributor, with a 25.9% increase in revenue to RMB 3.3 billion. Other notable contributors include the 361 Kids business, which saw a 10.6% increase in revenue, and footwear, apparel, and accessories segments, which experienced growth rates of 12.3%, 5.7%, and 95.8% respectively. The adult segment also reported a 10.6% revenue growth rate, while the kids segment grew by 10.3%. Additionally, reportable segment revenue increased by 10.6%, and revenue from external customers rose by 10.7%. Government subsidies were another contributor to revenue growth, increasing by RMB 14,902. On the decline side, accessories revenue saw a significant drop of -95.8%, while Degrees Children and Plastics revenue declined by -43%. These declines highlight areas where the company may need to focus on improving performance or adjusting strategies to mitigate losses. Net income experienced a significant surge between 2021 and 2025, increasing from RMB 601,700 to RMB 1,308,884. This substantial growth can be attributed to cost reductions and improved capacity utilization. On the other hand, profit margins underwent some changes during this period. The gross profit margin remains stable at 41.5% for both 2024 and 2025, indicating no significant fluctuations in this area. However, the operating profit margin decreased from 18.3% in 2021 to 15.9% in 2025, suggesting a decline in operational efficiency. In contrast, the margin of profit attributable to equity shareholders showed an increase from 10.1% in 2021 to 11.7% in 2025. This improvement can be seen as a positive development for shareholders. Additionally, the return on equity, ROE, reached 13.5%, marking a 1.1 percentage point increase from the previous year. Overall, while net income saw significant growth, profit margins experienced mixed results, with some areas showing stability and others indicating decline or improvement. The company's financial performance indicates a significant improvement in its operating cash flow. On page 8 of the report, it is noted that operating cash flow increased by 1,067% to RMB 0.8 billion, demonstrating a substantial increase in the company's ability to generate cash from its core operations. This trend is further reinforced on pages 67 and 130, where net cash inflow from operating activities is reported as RMB 814.6 million and RMB 814,615, respectively, for the year 2025. In contrast, the previous year saw a significantly lower net cash generated from operating activities of RMB 69,807. Furthermore, the company's cash reserves have also seen a substantial increase, with cash and cash equivalents rising to RMB 27,330 in 2025, compared to just RMB 1,032 in 2024. This indicates that the company is not only generating positive operating cash flow, but also accumulating sufficient liquidity to support its future growth plans. The company's debt level and interest expenses have undergone some notable changes over the past year. Initially, it appears that the total borrowings and interest-bearing debt increased significantly, with a rise of RMB 37,781 from RMB 261,220 to RMB 299,001. However, further analysis reveals that the total debt actually decreased by 0.2% from RMB 2,621,097 in 2024 to RMB 2,615,746 in 2025. In terms of interest expenses, there is a clear trend of decrease. Finance costs dropped by 21.9% year-on-year to RMB 10.5 million in 2024, and the total interest expense on financial liabilities not carried at fair value through profit or loss also decreased by 21.7%. Additionally, interest expenses decreased from RMB 30,281,000 to RMB 28,689,000. Overall, while there was an initial increase in debt level, the company's total debt actually decreased slightly over the past year. Meanwhile, interest expenses have consistently decreased across various metrics, indicating a reduction in financial liabilities and costs. The company has seen significant growth in various segments and regions. The mass sports market, professional products such as running, basketball, and athleisure wear, adult consumers, and children and teenagers through the 361 Kids brand have all performed well. Internationally, business has increased by 125.4% year-on-year, with notable growth in Southeast Asia, the Americas, Europe, and regions covered under the Belt and Road Initiative. These regions have shown strong performance, indicating a successful expansion strategy for the company. Management is optimistic about the company's growth prospects in the sporting goods industry. They see opportunities for expansion driven by technological innovation, specialization, and diversification. To capitalize on these trends, the company will continue to invest in e-commerce, focusing on sales growth and brand reshaping through investments in technology, materials, and design. The company is also prioritizing e-commerce growth by partnering with elite athletes and sponsoring world-class sports events to enhance its professional sports positioning and deepen consumer engagement. Management's vision is to become an internationally recognized sports brand, maintaining good relationships with stakeholders and bringing value to them. In terms of strategy, the company aims to balance reinvestment for future growth with consistent returns to shareholders. This balanced approach will enable the company to maximize shareholder value through strategic decision-making, while also prioritizing ESG aspects and investor relations. The group's commitment to a balanced equity and debt position will ensure adequate working capital to service its debt obligations. Overall, management is focused on driving growth through e-commerce expansion, technological innovation, and strategic partnerships, while maintaining a strong commitment to shareholder value and stakeholder relationships. The company's financial performance reveals a commitment to shareholder returns through dividends. Specifically, it paid out HK 31.7 cents per ordinary share in total dividend payments. This payout ratio of 45% indicates a significant allocation of profits towards rewarding shareholders. In contrast, there is no evidence suggesting the company has engaged in share buybacks. That concludes the financial summary for 361 Degrees International Limited. Feel free to comment below, and I will be happy to answer them when possible.